Welcome to FOMO Consulting for your daily AMC Stock Analysis video on Saturday, April 24th. Ladies and gentlemen, I believe the squeeze has started, and I'll show you why shortly. The apes are winning, the diamond hands are winning, the retail investor is winning, and I believe we will all win very, very soon. So if you find the video informative and entertaining, please hit the like, share, and subscribe button. It's a newer channel, and I would certainly appreciate the support. Let's get into the video. Brief recap of yesterday's action. Overall, the market was green. All three major indexes were green. AMC certainly felt the effects of that, and we had a great day. Let me read you a brief quote. "The search for truth is more precious than its possession," by Albert Einstein. I believe that's certainly relevant because with all the social media platforms, StockTwits, Reddit, everyone else looking in, trying to find all the facts and information they possibly can with all their own personal due diligence, the information sharing, I believe we are all searching for the truth, and I believe that is a relevant statement that the truth is more precious than its possession. So let's look at yesterday's action. Very, very strong day. AMC closed at $10.16, up 17 cents or 1.7%. Traded a little bit green after hours, which was positive. But most importantly, the last 20 minutes or so of the trading day was where I found the absolute most confidence. If you recall last Friday, the battle was for 950. They certainly won that battle. They pressed it way below 950. They tried the same thing again yesterday, but this time we said, no way, not happening. We rejected their downward pressure and actually forced it back up to the VWAP and actually a bit higher. We regained the $10 floor. We showed a ton of strength yesterday, and I do believe this sets us up beautifully for next week. So let's look at a couple key indicators here. The moving average is certainly trending in a bullish direction on the daily chart, but more importantly, the MACD appears to be getting ready to have a bullish crossover. It is now touching the signal line. It looks like we are having a trend reversal. That is exceptionally positive, I believe, for us in the very near future. So again, looking out on a larger scale over the last 3 months or so, every time on the daily chart, the MACD has had a crossover of the signal line, we have popped. We did it in the baby squeeze in late January. We crossed over again in the early mid-March timeframe. We trended up to close to $15, and we are now on the brink of yet another bullish crossover. Where that leads us, your guess is as good as mine, but I'm sure we are all hoping for the squeeze, right? So let me read you a brief definition around convertible bond that will be relevant here shortly. Convertible bond arbitrage is an arbitrage strategy that aims to capitalize on mispricing between a convertible bond and its underlying stock. The strategy is generally market neutral. In other words, the arbitrageur seeks to generate consistent returns with minimal volatility regardless of market direction through a combination of long and short positions in a convertible bond and underlying stock, essentially a form of delta hedging. So let me show you why this is important. So there is a website I did some due diligence on, and I somewhat recreated some of the diagrams that they have, obviously due to copyright. But let me read you a brief excerpt out of that research article around AMC and the GME short squeeze in late January. It says AMC was among the most heavily shorted firms in terms of both borrowing of the firm's bonds and equity at the start of 2020. Obviously, that trended throughout. You had COVID and a lot of other underlying issues where the price point of AMC went down. We all know that, right? So what I want you to look at specifically on the chart is a couple things here. So in September of 2020, what you're looking at, the red line represents the shares on loan. The green line is the short interest. At that point, the pricing actually touched the short interest and the shares on loan. That was due to a resetting of the convertible bonds. Past that point, there was a huge divergence. The shares on loan incrementally and the short interest continue to gradually move upwards. I almost find it humorous that even before the baby squeeze in January, we're talking about shares on loan of 30, 40, upwards of 50 million shares on loan. So, but that's also relevant to our current situation. But if you look very closely, the baby squeeze, nature and the universe loves equilibrium, right? The only other point at which the price actually touched the shares on loan to equalize the process was during the baby squeeze. So that's going to be relevant here very shortly. But the huge divergence between the underlying stock price and the shares on loan and short interest, the wider that gap got, I believe the stronger the squeeze. Let's move forward. So this is the average short borrow fee for AMC. It trended almost at one point to 140%. Keep in mind, these are exotic hybrid financial instruments that the average retail investor does not utilize nor have access to. But what I want you to pay specific mindfulness of on the chart are where the arrows are. So in late mid-November, there was a fall off in the short borrow fee, a very hard drop. Then there was a very abrupt, quick spike in the December timeframe, mid-December. At that point, it started to kind of slowly go back down a bit until around early January. Around January 11th, it really fell off hard. And if you look where the yellow arrow is, that is the only time the borrow fee crossed over the actual share price. And at that time, the share price was around $250, right? Before the squeeze. That is very important. That is very substantial to know. So let's look here further. So I've now taken all three from the chart and diagrams and overlaid them to show you the divergence, the extreme divergence between the short interest and shares on loan prior to the January squeeze and the extreme fall off of the borrow fee prior to the squeeze. It absolutely collapsed, causing a extreme divergence. I think this is relevant. So this is a zoom in again of January 11th. One key trigger, keep in mind the smart money is smarter than me, smarter than you. They have tools, technology, a lot of things that help them, in their business, right? We merely have, Webull, Fidelity, all of our different brokerage platforms to utilize. But simplifying it, the average fee is the red line. Zooming in, on the daily chart, there was a MACD bullish crossover on January 11th. Ironically, around that time, the borrow fee substantially plummeted. I believe they knew, based on the indicators, that there was a bullish sentiment, and they adjusted accordingly, right? So this is where it gets fun. So this is the daily chart for pretty much the month of April. We all know the short interest is rising to record highs every day. 100% utilization. We all know that. Shares on loan are skyrocketing every day. I believe we were in the 140s last week. Every day it goes up by a million or two. As through yesterday, I believe we were around 154 million or so. So we have huge upward movement from those two indicators. However, the borrow fee is creating a huge divergence based on the information I have. On the 16th, it was at 18%, 19th at 21%, on the 20th at 19%, on the 21st, we all know it jumped to 26.3 or so. Through Thursday, it tanked very quickly to 8.93. Yesterday's short borrow fee percentage is suspect at best. I haven't seen anything, quite frankly, I would trust. Many of the websites' information are void of information, like Fintel and others, which I find suspicious, I'm sure, like the rest of you. But going off of the January baby squeeze, with the extreme divergence between the short borrow fee and the shares on loan and short interest, when we have seen that divergence, and we also saw the same divergence in many ways with GME, I believe this is a precursor to the squeeze. I believe it has started, which is why the websites have removed the information, because we're smarter than they think we are. So again, this is my own due diligence. I'm not a financial advisor, nor is this financial advice. I just wanted to share it with you. You can make your own decisions. So again, one other just quick reminder. When we have a bullish crossover of the MACD on the daily, we go up. And I believe this is precisely about the time we are starting the squeeze based on these key indicators. We have the divergence that is beginning. We have the MACD crossover. We have moving average starting up. But the one thing that we have is a higher launching pad. We are in the $10 range versus $2 range, right? So the price point when the squeeze happens, we also have 3 times the amount of shares on loan as we had before the January squeeze. So all the indicators really lead me towards believing this is going to be a massive event. So another quick reminder, before the January baby squeeze with AMC, on the 26th, like I showed you, where the borrow fee crashed prior to the squeeze, it went to 3.21%. That was a extreme drop from where it was above 100%. The day of the squeeze, it rocketed back to 22%. So we've all seen this in one capacity or another. This is through my Fidelity account. It's always fun to look at what the probabilities are, but probably most exciting is a greater than 50% chance of this being at $52. I think that shows extreme bullish sentiment. So it's always fun to kind of look at this, right? So we had 5 institutional investors buying yesterday, huge increases in positions. Let's follow the smart money. They know something's up. They certainly have better tools than us, but I can't imagine they're not seeing what we're seeing with MACD moving averages, and some of these other key indicators. We own almost 80% of the shares as retail investors, so we are in a perfect position for this. Through the options chain yesterday, through my Fidelity brokerage, these are the largest sales of the day on the options chain. Just the enormity. You got 1,500 at a $10.50 put strike price, a $10 call, 1,000. Now these are both expiring the end of this week, but the better part of these are all calls, which makes me exceptionally bullish once again. Big money buying in, the IV is low. It just reinforces, I think, what we already know. A quick snapshot through my Weevil account. If you just look at the potential for a squeeze, and if we get the price moving up, let's just say into the 11s, Monday or Tuesday, this is the open interest on puts only expiring on Friday the 30th. I'll let you do the math, but the numbers are huge, right? I think they're going to be in trouble if we keep pressing the price higher. Again, just a quick snapshot of the options information from Fidelity. IV is attractively low, especially for the big money. Overall sentiment is very bullish, as indicated by the green bars versus red bars. Around 2 to 1 or whatever on an average. So again, exceptionally bullish from the big money perspective. So another quick little snippet from my trading platform with Fidelity. I just thought it was interesting where they show the key levels of resistance and support. Pretty much there's no resistance until we get to around 13.25. I thought that was exceptionally bullish. I'm very excited to get into next week. So anyway, I just wanted to share that, but they are identifying some pretty high levels of resistance, but I think really from where we stand, we have about a $3 playground, right? So from a credibility standpoint, I am as invested in this as any of you. I believe in this stock. I believe in the company. I believe in the movement. I believe in what we're doing, and I am diamond hand to the end. I can promise you that. Let me read you one brief quote. From now on, we live in a world where man has walked on the moon. It's not a miracle. We just decided to go. From Jim Lovell, Apollo 13 astronaut. I believe this is relevant because I believe, let's just call it January, we all decided to go to the moon. And I hope that we all get to fly on the same ship, and I hope we all get to walk on the moon and leave our footprints like Neil Armstrong and the others. So most importantly, I want to thank you for watching. Thank you for spending a few moments with me. And if you found this video informative and entertaining, please like, share, and subscribe. It is a newer channel, so I would appreciate the support. But most importantly, I hope your life is full of green candles. Take care. See you soon.